Hello, this is Eric Thompson, president of Peerless Wealth. We are a registered investment advisory firm located in Columbus, Ohio. Thanks as always for tuning in. The topic of this video, when does investing become gambling? Might seem obvious, but there's some gray area between the two, and that's part of the advantage of having a financial advisor that you can call when certain opportunities come up and sort of talk things through. So I'm going to go through a bunch of examples. A lot of these things are actual questions I've been asked about various investments and how I've responded. When I was thinking about this, it reminded me, there was a case that went all the way to the Supreme Court in the early 60s. It was actually the state of Ohio sued a filmmaker, a French filmmaker named Nico Jacobellis, for obscenity. They thought that his film, called The Lovers, had too much obscenity and pornography in it. And the filmmaker said, well, that's a violation of free speech. And it took years, but it went all the way up to the Supreme Court. And there's the famous quote from the Supreme Court Justice, his name was Potter Stewart, who was asked how he would define pornography. He said, "I know it when I see it." And I think that's a lot like investing versus gambling. I know it when I see it, but there are some definitions that I'll go through. So what is gambling? Gambling has a few defining traits. It's typically short-term. It's what's called a zero-sum game or a negative-sum game. Zero-sum games means one loss is another person's gain. There's no upward trend. A negative-sum game is typical with casinos and the lotto because the house always gets a slice. And there's typically no underlying business producing a value. Examples: lotto tickets, casinos, sports betting. And the latest thing that is called prediction markets or poly markets. You can actually bet on elections. You can bet on what Congress is going to do. You can bet on if a certain company will make an initial public offering. But it's a zero-sum game, less a small slice for, the house. So those are all, at best, those are a zero-sum game. That's not investing. Now, there's some gray area between investing and gambling that I'm going to call speculation. Speculation isn't pure gambling, but it relies more on momentum, sentiment, and crowd behavior. Speculation isn't evil, but it just requires, in my opinion, very small position sizing and an emotional discipline. And so I'm going to walk through some real-world examples, and I'm going to pull up. You'll see it come up on the screen. And I'm gonna give you my verdict. Is it gambling? Is it investing? Or is it speculation? Number one, lottery, casino. No earnings or cash flow, no underlying value, primary driver chance, obviously gambling. Sports betting, poly markets, same thing. Day trading. I read a study about this that only about 13% of day traders, this is people that try to dart in and out of stocks, often daily, several times a day, trying to catch patterns and trends. There was a study done on the people that reported themselves as day traders, and only 13% of them were profitable after 6 months, and only 1% of them were profitable after 5 years. And I knew this before I read this because all the big firms, whether it's JP Morgan, Goldman Sachs, Fidelity, Vanguard, none of them have any mutual funds or ETFs that focus on day trading. They have the brightest people from the best schools and the best software and all these firms, and they don't invest that way because it doesn't work. Typically, that's an example of something where someone's trying to sell a course as opposed to, because if it worked, they'd be doing it on their own. Next one, penny stocks. These are, just because something's traded on a stock exchange does not make it an investment. Penny stocks are highly speculative, and they're very prone to pump and dump schemes. Especially with social media nowadays. If you remember a few years ago, the Haktua girl, there was a coin called Haktua coin or something like that. I can't remember what it was called. But it was the classic pump and dump scheme. A celebrity or semi-celebrity gets behind it, pumps it up, people buy, and then the people that started the scheme sell. And they make the money and everyone else, and then including Haktua girl, from what I understand, lost a bunch of money and there were charges filed against her, and I think she was able to sidestep them a little bit because I'm not sure if she knew what was going on. But I had a client call me just a few months ago about a company that she saw on some banner ad of whatever website she was on. And she gave me the symbol, and it was a upstart that had a very promising cure for cancer. And all these, popular sort of reasons that this thing was going to go higher. She wanted to buy shares. I said, I don't want to do that in the account I'm handling for you. If you want to do that on your own, go ahead. And she opted out, and it was $5 a share, and it went down to about $3 a share in about a month. That's probably lower than that now. Now, let me be clear. Let's say that it went the other way, and at $5 and it went to $20. And my advice would have been, don't buy it. Would that advice have been bad advice? I don't think so, even though it went up, because the odds of those types of companies going up, you might get a needle in a haystack here and there, but every 10 of them that comes across my desk, 9 of them will probably go to zero. And even the one that goes up is probably not going to make up for it. So penny stocks, no, they're on exchanges that are not regulated. They don't have to have the best financials. Meme stocks, if you remember, GameStop was one of those. Again, this is speculative. Maybe not gambling, but definitely speculative. A lot of people got wiped out on that. Again, herd mentality, potentially pump and dump. There was not a lot of financials for that to be priced the way it was. Here's an interesting one, DGT, that's Trump Media Company. He came out with his own media company, and there was a legitimate business venture to ultimately make money. If you were to buy all the shares right now, you'd have to pay about $4 billion to buy it as a company. It does produce revenue, no profit, but it does produce revenue of about $4 million a year. To put that in perspective, the average McDonald's restaurant produces about $4 million a year in revenue, about the same. And actually, McDonald's will typically have $500 or $600 grand a year in profit. The Trump company doesn't even have profit, they have losses. The typical McDonald's franchise, single franchise that's producing, we'll say $4 million a year, is valued at about $5 million, not $4 billion. So if it was valued at $4 billion would be 1,000 times the typical McDonald's franchise for the same revenue. It's total speculation. And prior to the election, it was about $40 a share. Trump got elected. He's doing very Trump things right now. You would think it would probably be up. It's gone from 40 to 10, even though he got elected and everything seems to be moving in his direction. These are some of these are warnings. I'm going to go to the next one, Bitcoin. 5 years ago, I would have called that gambling. Now I'm going to call it borderline investing with a little bit of speculation. I'm okay with a little bit of it, but sizing is very important. Over 10% would scare me. I like closer to 5%, and that's if you're aggressive. The other coins that I'll call meme coins, again, the Haktua girl thing, stay away. Here's one, NVIDIA stock. It's now the largest company in the S&P 500. That's investing. They have cash flow, they have profit, they have the fastest computer chips out there, and they're growing at 30 or 40% a year. It's valued very high right now. So again, sizing is very important. Here's one, Nephew's Startup Restaurant. I'm gonna put that in the gambling area. Restaurants are probably the most, have the highest failure rate of just about any business you can start. So that definitely is gambling. What about shares of McDonald's stock? Still in the restaurant industry, way different. Now we're investing. It's got a proven record. You can see the share price over decades. It pays a dividend, proven concept. Next one down, Airbnb rental. Buying a property, that's an investment. Properties go up over time, but realize that's a very active investment, not a passive investment where you can just sit and collect rent checks. These tenants are turning over, trashing the place. You got to do tax returns, financials, you got to collect money, and it doesn't always work out as well as it might seem on paper, but it is an investment. Next one, a venture capital fund. There are a lot of investment structures that I'm able to do for clients instead of public equities, that private equity that are funds that they're just not publicly traded, and some of them are very good, and the managers have a very good track record, and depending on the fund, that's definitely an investment, but they typically have long lockup periods. And if it's a venture capital fund, you're going to have some risk there. So it's going to be relatively illiquid and in that aggressive bucket, but it is an investment. Last one, timeshares. I'm in the process of doing a video on this. not an investment. You're not investing in a timeshare. You're buying in all probability, a depreciating asset with no earnings, no cash flow, and you just get a maintenance bill every year. So hopefully that helps you with sort of what my thoughts are on what investing versus gambling is. I always welcome clients when they call, even though I kind of have my typical portfolio that I put clients in, none of which is gambling and probably none of which is speculating. But I always welcome questions that clients have, and we can talk things through. And that's why you have a good advisor. So with that, I'm going to wrap it up, and we'll see you next time.